to go.
Excellent. Well, thank you very much for joining me. Very pleased to provide an update on what we're doing, all things hot chili down on the coastline in Chile. We're one of the larger scale developers outside of the majors. There's not many of us in the world, and there's not many that are not only meaningful, but are also near term. What we'll be talking about today is just an update on the copper project we're developing that we've been consolidating on the Chilean coastline for over a decade. And in parallel, what the company is doing with some very unique water assets which we've developed through the permitting process of Costa Fuego, what that means to this entire region, a region that's hosting almost 20% of new copper supply over the coming 15 years, and how the company is using this as a funding optionality to provide that answer to how a junior builds a billion-dollar project without destroying its shareholders through dilution. So we'll talk a bit about that. Quickly, where we are in copper, it's a very interesting space. We're no doubt in the early stages of a major copper cycle here. The price of the commodity is tested $5.20 again this year, but it's a very, very different cycle that we're moving into. It's about lack of supply. So the projects that we're going to be discussing today, there are not many of them, and it's what makes this project so unique. These timeframes of 17 to 20 years to develop assets of this scale are very real. Hot Chili has lived through every day of that, and we've had some supportive shareholders, some in the room, which have lived this experience. But this is unique. A project that can put out 100,000 tonnes per annum of copper, 50,000 ounces of gold at the moment over 16 years. There are not many of those. And with Philo being taken over by BHP, the list of those projects just got shorter. There are 5 of us in that class. So we have a very large resource base now at 1 billion tonnes, 85% of that in the measured and indicated. This is ready to go for our first reserves, our pre-feasibility being delivered at the end of this year, in parallel with a water study that is set to establish a major water business for the Huasco region that Hot Chili can effectively use to fund this copper project. And what makes this really unique is that this is not at 4,000 metres altitude. So there are 2 baskets of large-scale copper projects in the world. The ones that you get nosebleeds when you go to visit, and the ones that are down on the coastline that don't have capital bills that double and triple by the time you finish your 4-year construction time frame. So this is very similar to what we're seeing Capstone developing to the north of us, on track with their capital estimate and on time. So not many of these projects at this scale exist, and this has taken 16 years to consolidate and put together from scratch. It's not a project that sat on the shelf for 20 years and couldn't be developed for any particular reason. So we're in Chile, we're on the coast, we have a pretty tight capital structure. We've got some major names there on the register, not least of all Glencore, holding about 7.5%. We are an ASX listed company. We trade like an ASX copper developer, and there lies the opportunity. We trade at about a 3 to 4 times multiple below the average valuations attributed to our North American peers. It's why we have the listing. It's why we're expanding our reach into North America, gaining shareholders. But at the moment, the opportunity still exists because we trade like an Australian stock. And if we look at the performance of the copper developers and the copper equities in general over the last 3 years, you would be thinking that there was no copper cycle coming, because we're sitting at probably the precipice of an electrification future where copper is the key ingredient, and we just simply don't have an answer for where the supply is going to come from. Copper demand doubles every 25 years, and we have a 25 million tonne market that's set in the next 25 years to go to 50 million tonnes. That is a lot of copper required. And when you only have 5 projects that can put out 100,000 tonnes or more outside of the majors, that's a big problem. And that supply problem is not going away, and that is what is going to be driving incentive prices to allow every single one of these projects to actually be developed. So we're in a situation is where We're like a large-scale iron ore developer when iron ore is sitting at $20 a tonne before the China boom occurred. So that presents an opportunity for everyone to position into copper if you believe in what's about to occur in a sectoral bull run over the coming years. What's underpinning our near-term horizon is all of the work that we've done on our permitting. We have basically everything in place bar our last permit, which is our EIA, which will be submitted next year. So we have power access, we're connected to the central grid, we sit on the Pan American Highway at 700 metres altitude, we have all of our surface rights, our easement corridors, and most importantly, after 10 years of permitting advance, we've secured our own maritime concession to supply salt water to this project. So this project is half the cost to build because we're not up in the Andes building $500 million water pipelines, and we don't require $500 million desalination plants to process our ore body. But most importantly, being in the Atacama, we have access to non-continental water supply. Mining in the Atacama is not going to be touching any groundwater, and that has been a big issue for all of our neighbours around us, and that's why a lot of these projects cost multiple billions of dollars to build. We're also taking advantage of a lot of the infrastructure that surrounds us, not least of all, we've got a port right next to us. We signed a deal with the port, which means we'll be studying a bulk concentrate terminal to be established on this part of the coastline, and that is providing Huasco with the ability to get these major undeveloped projects out through port and just coming straight downhill into this port facility that is already built. Being 20% partner to the study means that we have right of first refusal as a first customer on that port. It was one of the last things we were trying to tie to the project, which we now have. Just quickly, the resource, it's very conventional. This is large scale. It's seen some $220 million of investment by the company, and most of it is in the picture that you're looking at there. This is 85% measured and indicated. We've seen sustained growth. This was a project that was incepted by Hot Chili. This is from discovery to 1 billion tonnes at this point, and we think we've got more left in the surrounding area, which is why we're continuing to consolidate. So with 85% at measured and indicated, 800 million tonnes in that basket, we sit well entrenched within the top 10 undeveloped copper projects in the world. We are not special by grade, but we are special by the location where the project is and by the elevation at which we're developing. And that has directly led to these financial outcomes. The first time we put this together as a hub approach, punching out a lot of metal, about $850 million US of revenue every year. That's at a $3.85 per pound assumption, 8% discount rate, and low elevation and low strip ratio on our pit of 1.8. That's what produces $1.33 per pound cash costs. And what produces $1 billion price tag for that amount of metal to be produced, or i.e. the lowest capital intensity in the sector, it's the fact that we didn't have to build all of that high-end D&D infrastructure to get that kind of production base up and going. So these are the PEA numbers that are being turned into pre-feasibility numbers at the moment. We enjoy strong leverage to copper price. 85% of our revenue is associated with copper. It means every 10 cents a pound above $3.85. Consensus is sitting at $4.21 today. We add about another 100 million US NPV after tax onto the bottom line. So if we look at outside of elevation, what's differentiating us? It's this extremely low capital bill to build such a large project. So this is about the same kind of production level that Oz Minerals had before it was taken over by BHP for $9 billion last year. And so that has left us in a very interesting position, low capital intensity, low elevation, and one of the only copper developers, and there's some pretty sizable names on that list, one of the only copper developers that actually has a maritime concession. That's really, really important. So we may well trade well below our North American peers on a value basis, whether it's on a per metal, per pound basis, whether it's on a PNAV basis. It's there, it's real, it's what we're trying to bridge the gap on. I've talked about exploration a little bit. We're not going to talk about it a lot today, but our team is active on the ground, pushing out on the expansion of this land holding and taking out the low-risk opportunities, which we have a significant amount of capital put aside to deploy on over the coming 12 months. We think this 1 billion tonnes gets bigger, and we think ultimately that growth is not going to slow down our development timelines. Pushing a project of this scale into production in late 27, 28 at the earliest is a very, very good time for the copper sector and for the financing of this project. And when we talk about financing, we talk about now our secret weapon, Huasco water. We took all of our water assets, our easement corridors, our maritime concession that took 10 years to secure, our land accesses on the coast, our second maritime application that's 6 months underway, our ability to also supply desalinated water. And what we now have is a new company that we own 80% of which I'm engaging with the world's largest water consortiums that build these projects. And what they need is not just the assets, but they need the customers. We are the foundation customer. So if we look at a transaction that Antofagasta just did 6 weeks ago with their Centinela mine in Chile, also run by Saltwater, on the coastline, but 140 kilometres of water distance to get that water to their mine. They just sold their water access rights for $600 million US to a consortium of Amar Water and Transelec. And now that consortium is building a $380 million water expansion for Antofagasta. So they outsourced a big chunk of their capital to build the expansion, and they also monetized those assets, about $1 billion transaction value of accretion to Antofagasta. Hot Chili is thinking about it in a very, very similar manner. So this project is now positioned for major catalysts at the end of this year, pre-feasibility on our copper project, a pre-feasibility on our water project. Our EIA, finally after 10 years of run-up and a massive amount of investment in that, is ready to be submitted next year. And we're on track for this to be positioned for project financing in 26 or early 27. But what we have now is that answer to how we're going to raise $500 million of equity to build this project. We have offtake available. It's clean concentrate. It's seeing an extreme amount of interest, particularly from the Japanese. We have streaming. We have 50,000 ounces of gold that we haven't touched. But most importantly, we have something that nobody else has, an embedded strategic asset which can be sold down, which can be used to reduce our capital and supply a large component of that equity to build this copper mine. So hopefully that provides a good update, and we look forward to delivering this as one of the very few 100,000 tonne plays available outside of the majors in the coming couple of years. Thank you.
Thanks so much, Christian. We actually have time for a question. Going once, going twice, sold, lunchtime. Thanks, Christian.